So what do tariffs, silver, and a tech sell-off all have in common? Well, apparently they've all decided to make Monday morning a little more dramatic than we asked for. From record-breaking metals to markets trying to recover from a Trump tweet storm, this week is off to a wild start. So before you place your next trade, trust me when I say you are going to want to watch this. Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I unpack the biggest market movers across currencies, commodities, and indices, blending fundamentals, technicals, and well, just the right amount of common sense. Because let's face it, markets don't always make sense. Let's kick things off today with currencies, more specifically USD CHF. So the USD CHF has climbed to 0.8012, up 0.58% from Friday's session. Not bad for a Monday that began with tariff chaos. The dollar's strength today isn't just about numbers, it's about nerves, specifically traders' nerves, which are easing a little bit, especially after President Trump's weekend backtrack of his 100% China tariffs announcement. Apparently, Trump, pulled the taco. As one strategist joked, as the saying goes, Trump always chickens out. His softer tone helped the dollar index recover to 99 flat, while holidays in the US and Japan have kept trading volumes light and volatility lurking in the shadows. So today in the US is Columbus Day, but markets will still be open. But the real twist came from the Federal Reserve's Mary Daly, who added a dovish note by hinting at further rate cuts ahead, citing a, worrisome labor market. With the Michigan Consumer Sentiment Index due later, traders are watching for, any confirmation that consumers are losing confidence, which would reinforce that dovish case. Meanwhile, in Switzerland, inflation remains tame and consumption soft, fueling expectations that the Swiss National Bank could keep rates negative for longer. A combination that's, kept the franc on the back foot. Technically, USD CHF dropped hard from that 0.808 resistance. Support is now seen near 0.797, with a break below that potentially signaling a short-term correction, potentially all the way back down to 0.786. If today's sentiment, disappoints, expect some intraday pullbacks. Otherwise, the dollar bulls, may just keep humming along. Moving over to commodities, silver is, officially the drama queen of the metal markets, jumping more than 2% to hit $51.65 an ounce, a brand new all-time high. So what's fueling this meteoric rise? Well, it's a cocktail of renewed US and China trade tensions, political instability across major economies, and growing expectations of that US rate cut. So when Trump threatened 100% tariffs on China last week, investors panicked. But when he softened his tone over the weekend, they didn't exactly breathe a sigh of relief. Instead, they doubled down on safe haven assets like silver. And, in a tight physical supply in London and persistent ETF flows, with holding now above 822 million ounces, and, you've got quite a perfect storm for a bullish silver. ING's commodity team even called it a fifth consecutive year of supply deficit. And judging by the price action, they might just be right. Technically, silver has now gained over 20% this month and 64% year on year, pushing through its previous record of $51.60. Immediate resistance is that psychological $52. while support sits at the bottom of the ascending channel at around $48.70. As one trader joked on X this morning, silver isn't just shining, it's burning holes in the shorts. So, will this rally continue? Well, that depends on whether the Fed's rate cut chorus gets louder, because for now, silver is acting like it's its own soundtrack. Finishing things off with equities. Well, Friday was nothing short of a horror show, where the Nasdaq plunged 4.71%, its worst day since April. The tech-heavy index is trying to stage a comeback, up 2.8% this morning, lifted by Trump's, well, everything will be fine with China comments. Last week's sell-off was brutal. Nvidia, AMD, and Tesla all fell between 5 and 8% after Trump's tariff threats sent shockwaves through semiconductor and EV sectors. The rebound now hinges on whether his softer rhetoric holds, or are we in for another round of, well, tariff Twitter theater. The US government shutdown is now also dragging into its second week, adding another layer of uncertainty. With earnings seasons kicking off tomorrow with big banks JP Morgan, Citibank, Goldman Sachs, Wells Fargo, and Morgan Stanley, well, this will be the spotlight for now, giving the markets their first real taste of, well, quarter four sentiment. Technically, the Nasdaq 100 trades near 24,650 with key support around 24,200 and resistance near 24,800. A sustained break above that could signal recovery momentum, but for now, it's more a, well, press reset and hope situation. After all, when markets move faster than your Wi-Fi, it's usually best to keep your safety belt fastened. So, what should we be keeping an eye on going into today and tomorrow's session? Well, keep watch for early earnings reactions from the banking sector. If optimism fades, we could see safe havens like gold and silver continue to glitter, while equities might have to fight to stay in the green. Either way, it's shaping up to be a fascinating week where confidence, not just charts, could drive that next big move. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.